Imagine waking up tomorrow and finding out US companies might no longer have to report quarterly earnings. No more quarterly hype. No more earnings calls. Just silence until the end of the year. Wall Street could freak out. Volatility could spike, but here's the twist. This could be huge news for Bitcoin. So stick with me because I'm going to break down exactly how this affects markets, investors, and savvy Bitcoin hodlers like yourself could win big. All right, family, what's up? It's Coach Massey, and you're locked in to the Daily Hodl. This is your go-to source for Bitcoin and financial news, along with market insights that cut through the noise. If you want to stay ahead, stack knowledge like you stack sats, and understand what's really moving the market, you're in the right place. All right, do me a favor. Smash that like button, hit subscribe if you haven't already, and share this with someone who loves Bitcoin news just as much as you do. Today's episode is packed with insights you won't hear anywhere else, and I got them here just for you. So let's start with the big headlines. President Trump suggested public companies should no longer be required to report quarterly earnings. Since 1970, this has been a fundamental part of market transparency. Every 3 months, investors get a snapshot of corporate health. Think about it. Earnings season is what drives market headlines. Stocks move based on surprises, misses, and beats. Without it, volatility could spike. Analysts, traders, and even institutions really rely on those reports to adjust their position. So here's where Bitcoin comes in. Bitcoin doesn't rely on corporate cycles. It's global, 24/7, and scarce. In a world with less predictable financial reporting, investors could flock to assets that can't be manipulated or diluted. Here's an example. Imagine a major tech company misses an earnings report, and the stock tumbles because analysts, well, they have no data to work with. A portion of that capital might flow into Bitcoin, an asset not tied to quarterly reporting. So, your takeaway is this. When traditional markets get less transparent, Bitcoin becomes the safe haven investors are looking for. So, let's get to the next story. Treasury Secretary Scott Bessent announced that upcoming U.S.-China negotiations could result in another 90-day tariff pause. Lowering trade tensions often boosts stock prices, but it also shifts investor behavior. So why does this matter for Bitcoin? Because every time markets face uncertainty or regulatory changes, investors look for alternatives. Even when tariffs are paused, the unpredictability of global trade markets really helps benefit Bitcoin because it's a store of value. So, in 2019, when US-China had trade tensions escalate, Bitcoin moved independently of stocks. It didn't just act as a hedge, it became a global risk-adjusted asset. Investors looking for stability outside the US dollar and global equities found refuge in Bitcoin. So let's put it together. Fewer earnings reports, trade negotiations, and regulatory uncertainty, well, that could be a perfect storm for Bitcoin adoption. Investors shifting capital to Bitcoin, and both love the growth and security. So let's connect the dots. Bitcoin is asymmetrical. It's capped at 21 million. It's global. It's transparent on the blockchain. People love it. So here's another key point. Scarcity. Like I just said, there'll never be more than 21 million Bitcoin. Unlike stocks or bonds, it can't be diluted or by printing money, really. Next, 24/7 global market liquidity flows nonstop. Bitcoin doesn't wait for trading hours or quarterly updates. And institutional adoption. ETFs, hedge funds, corporations are adding Bitcoin exposure. Adoption is accelerating. So, historical performance. In previous liquidity-driven cycles, Bitcoin has outperformed stocks and gold. An example, during COVID 2020, liquidity flood, Bitcoin surge, S&P 500 saw moderate gains, but Bitcoin is designed to thrive in uncertainty. Exactly what could happen if quarterly earnings disappear or trade tensions spike. So, Bitcoin isn't just a hedge, it's a portfolio equalizer. While the wealth gap continues to grow, Bitcoin gives anyone a chance to hold an asset that benefits the macro shifts. So here's the setup. Earnings reporting might change. Trade tensions remain. Global markets are unpredictable. So what can you do? Well, you're going to stack sats consistently. Dollar cost averaging remains one of the best ways to buy Bitcoin, or IBIT. That's what I do. You're going to watch adoption trends, ETFs, corporate treasuries, large holders indicating strong conviction. Maybe diversify smartly for some of those people because Bitcoin is resilient, especially in uncertain times. Remember, this is not financial advice. This is for education only. But connect the dots, stay disciplined, and think long term. Your timing is important, but your conviction and consistency are even more critical. All right, family. Now it's your turn. Do you think U.S. companies will stop reporting quarterly earnings? If they do, will Bitcoin become the go-to safe haven? Or will the market just adjust without affecting crypto? Drop your thoughts in the comments. I want to hear your take. So smash that like button, hit subscribe if you haven't, and share this video with someone who loves Bitcoin news daily on your daily hodl. So I appreciate you being here. Please remember, that's your daily hodl. Stay sharp, stay disciplined, and as always, lead, pray, hodl. I'll see you in the next one.